my word, we're going broke again, folks. Holy smokes, we got a lot to discuss in today's video, folks, and I mean a lot of things I got to show you. Market's starting to collapse again. Countless stocks are collapsing again. Vicious downward moves. Yeah, I hope you enjoy. Thanks for being here on a devastation day like today. So first off, when I opened TradingView today, I knew it was going to be a bad one because, it was on the big tech watch list, and every single stock on that baby was red. It was Red Dead Redemption out there. It was ugly times ugly. Just everything across the board kind of getting hit. And yeah, if I open up my watch list and big tech's all red like that, yeah, it's going to be a nasty one, okay? First off, the first thing that's going on in the market right now is today was the aftermath of what I call oh man, I don't know how I want to put it, the nuke that went off in the retail landscape over the past few trading days, okay? And today was the fallout of that nuke that went off, essentially, okay? And, I mean, BBBY was the stock that took us all down, right? That stock was the most talked about stock on Wall Street Bets that I personally even seen. It was more talked about than AMC for a couple days there last week. It was insane. Every single person was talking about this stock. People were piling in their money left and right. Next thing you know, the Ryan Cohen guy sells out and the stock just absolutely gets obliterated. I mean, remember, this stock has fallen like 60 or 70% now from the highs it reached just a few trading days ago now at this point. An absolute devastation move there. AMC fell massively today. There's a whole this ape thing had split off essentially. And so, some shareholders, AMC got this ape, but the stock price is still down massively today. That can affect algos. And it just brought down everything across the board. It was ugly times ugly. The retail trader investor list. Oh my gosh. Okay. Bad. The chef is back in the gulag again after it was coming back so dang strong and was looking like Donkey Kong. It was back to $8 plus, and now we're back in the gulag. The gulag for the chef is $6. We're back in the gulag once again for the chef, and it is what it is, okay? Palantir, almost back in their gulag. The gulag for Palantir is $7. So now Palantir is almost back in the gulag here. Just ugly, man. And, whatever you think about stocks like the Chef or Palantir or any of these, companies, the bottom line is, remember, in the short term, these babies get thrown in with the AMCs, the Bed Bath & Beyonds, the GMEs, whether you like it or not. It's the way it is right now. In future years, that will not be the situation. Palantir will be its own thing. The Chef will be its own thing. I'm 100% confident in that. But for right now, the fact is, if all those meme stocks are going crazy, it pulls up stocks like the Chef, pulls up stocks like Palantir. If all those are getting split in half, guess what? All of those get absolutely devastated as well. It is the way it is. We can complain about it. We can cry about it. It is the way it is for right now. Longer term, things can definitely change, obviously, there, and things will be based upon where these companies' revenues go, net incomes go, clients go, things like that. But for right now, it is what it is. And if you told me AMC and BBBY is down huge tomorrow, and GME and all those stocks, guess what? Palantir is going to be down huge as well. It's just the way it works for right now, at least. Okay, commodities. So bad news. A lot of commodities were up today. Natural gas was up big, about 5.5%. Wheat was up 2% today. WTI was up 1%. The commodities index in general was up. Corn was up. Oats were up. So yeah, definitely not something we like to see. Lumber was down huge. That is something we like to see. But yeah, I want to see red for these commodities day after day. Obviously, it can't go down every day, but we can at least wish for it. Now, at this point in time, this is where the markets are trading at. The NASDAQ is 23.1% off its all-time high. It's closing high, not intraday high, just to keep in mind. 22% off for the Russell now at this point in time. The S&P 500 is back down to about 14% off all-time highs, and Dow Jones about 10.5% off all-time highs. So, obviously it's been a pretty steep comeback in the back half of June and through basically the first half of August, but we're giving up a lot of those gains now. But keep in mind, we're still quite a ways away from where we were at those June lows. And I mean quite a bit away. I mean, we're talking about this, we're still 10 percentage points away there, right? I mean, that's a huge number. As far as the NASDAQ goes, that's over 10%, by the way. As far as the NASDAQ goes, we're, roughly 11 percentage points away from, the lows we reached back in June. So quite a bit away from there. Zoom, disappointed. So if you didn't see Zoom's numbers here, so their EPS came in a little better than expected, so that was good, but revenue missed. They came in at 1.10 billion versus 1.12 billion was expected. Zoom's revenue in the second fiscal quarter grew 8% year over year, slowing from 12% growth in the prior quarter, according to a statement. The second fiscal quarter ended July 31st. Zoom's net income fell to 45.7 million in the quarter from $316 million a year ago. Oh my gosh. As the company increased spending on sales and marketing, the strong US dollar, performance in the company's online business, and sales that got weighted toward the end of the quarter negatively impacted revenue in the quarter, said Zoom's finance chief there. So yeah, definitely not good that Zoom continues to see this sort of slowing, obviously, in their business. Management lowered its projections for the full 2023 fiscal year, that's what we're in right now, calling for $3.66 to $3.69 in adjusted earnings per share, and $4.38 billion to $4.39 billion in revenue, implying 7% growth. Yeah, I mean, for a stock like Zoom that everybody got used to growing at some ridiculous rates to now be growing 7% is just very, very disappointing, obviously, okay? Obviously that's way off of what kind of analysts were expecting here, and it just goes to another bad situation in regards to how folks are feeling about the market, earnings, these sorts of things. Economic conditions primarily caused executives to revise their view. No one wants to hear that, man. No one wants to hear that economic revisions are causing companies to, basically kind of slow up their numbers. But that's something we've seen pretty much across the board. If Zoom was the only company that said something bad about economic conditions hurting their numbers, I'd be like, calling BS on that, right? But the fact is, it's almost every single company. I don't care if you're talking about the biggest of the big dogs, whether you're talking like the NVIDIAs and big tech and those sorts of companies, right? Or you're talking a company like Zoom, or you're talking small caps, anything across the board. It's just kind of what we're seeing out there at the moment, and it's obviously not an ideal situation. Now, when it comes to Zoom, obviously it's a very popular stock in the market, right? Not nearly as popular as it was at one point, but still, you pull up CathyWoodStocks.com, which tracks, Cathy Wood's biggest investments on a daily basis for our main ARK fund. Their second biggest investment is Zoom. It's 8.39% of the weight. So, given that given that Zoom's going to likely be down huge tomorrow, I mean, ARK's going to likely go down as well. It's just kind of how it is. And, ARK continues to kind of be in a very, very tough place given the market and given just these companies continue to just miss these numbers. And, in this sort of market, you can't miss, man. And even though Zoom's valuation is much more attractive than we've ever seen it before, they still came in and they disappointed. And so that's just kind of the situation there with Zoom stock. More bad news. Ford to eliminate 3,000 jobs in an effort to cut costs. I swear, I just remember Ford announcing recently that they were cutting 8,000 jobs, okay? So now another 3,000 jobs. Ford is cutting 3,000 jobs from its global workforce, a majority of which are in North America. The cuts will include 2,000 salaried positions and 1,000 agency jobs in the U.S., Canada, and India, said, Bill Ford, who's the CEO of the company, or the chair, CEO is Jim Farley over there. So this is a situation that, a lot of people are worried about potential stagflation. Obviously, a lot of people are even worried about this dynamic where we have high inflation, but it's kind of exacerbated because employees are in a position of power and they keep asking for more wages, right? And more money, things like that. The issue I see is I don't know if the economy is going to be strong enough to withstand, let's just call it, companies continuing to give big, let's just call it wage increases and things like that over the next year. And so this is why I kind of feel like, if anything, we're going to see a continued kind of weakening in the let's just call it the unemployment numbers. I think unemployment is going to continue to kind of go up over the next 6 to 12 months, in my personal opinion. I think, I don't think employees are going to have that much in terms of if they're trying to go negotiate for higher wages and things like that, because we're just in a weak operating environment. When you're in a weak operating environment, it's very tough to do that. I think companies are when it comes to their workers, they're definitely in a position of power now at this point in time, which is very different than this time last year when companies were trying to hoard employees and trying to hire as many as possible, right? We're a long way from that. You've even heard this from the big tech companies basically saying, hey, you know what? We're good. If an employee comes across us who's the best of the best, we'll hire them. Outside of that, we're good right now. And if anything, we'll lay off. And if people want to leave the company, because people always leave these big companies, right? Like they might not even have somebody fill their position. They might just have somebody else take it over. So that's kind of the environment we're in right now, which is kind of needed. I mean, if you're going to talk about getting inflation down, which is something that's going to continue to come down in my personal opinion, unless commodities go beast mode again. The biggest reason why inflation's gone so insane, at least, over the course of summer, was you look at what happened with oil prices, look what happened with gas prices, right? They went to the moon, literally, in energy. That whole movement made CPI go absolutely nuts. If we can have that calm down and continue to be in, let's just call it a lower state, that's good. And if we're talking about a weakening of the economy, you're not going to have super high oil prices in a weakening economy. That's just not what happens, right? We watched this play out in 2008, early 2008, oil prices had peaked out. And then as the economy got worse and worse throughout 2008, and as we went into 2009, what happened with oil prices? They fell, down massively. Look at, obviously, in the Rona recession, look what happened to oil prices. That was a really insane kind of situation there. Don't expect oil prices to go negative or anything like that in this environment. But, when you've got a weakening economy, it doesn't support higher oil prices. That's just bottom line. So that's kind of the situation we got going on there. But, not good to see job cuts. We're going to probably see a lot more before this thing is over, if I had to guess, okay? Now, in terms of, anything auto related, most of these things are just going down massively, right? You look at something like Carvana, this stock was down another 15% today. This was a stock that was $300 something in the past year, right? And I mean, just absolutely no one wants to own Carvana stock. Look at CarMax stock down another 6% today. It's getting really dang close to its 52-week low. You can't find anybody to buy CarMax. And CarMax is a very well-established company, that is very famous. A lot of people know it. I've sold many cars to CarMax over time, and doesn't trade at some crazy PE ratio. But no one wants to own a CarMax right now because most people believe we're either in a recession or about to go into a recession. And so no one wants to own home builders in that environment. And no one wants to own automakers in that sort of environment, or not even automakers, just folks that even sell automobiles in any, sort of fashion. Look at a stock like Shift Technology. This stock is 95 cents here today. It was a stock that was $8 at one point, right? No one wants to own a Shift Technologies if they feel like the economy is getting worse and worse and worse, and less people are going to buy cars. That's just kind of the dynamic, right? You even look at a stock like Ford, which we just spoke about, right? Ford is obviously much closer to its 52-week low than 52-week high. And here's the thing. Ford's numbers have actually been really impressive. Like if you look at their quarterly numbers over the past few quarters, it's been very, very strong. But the problem is people believe that, one, supply chains are messed up, so Ford's numbers are going to be very limited. The second part is people believe that Ford's numbers aren't going to be all that, in 2023. Because if we're in a recession or we're going into a recession, people just feel like there aren't going to be as many vehicles sold, right? And especially trucks sold. We know for Ford's business, it's they're huge in trucks. There's no one bigger than Ford when it comes to trucks, right? And when construction jobs are plentiful, when a lot of homes are being built, all those sorts of things, right? People are buying trucks left and right because they need it for their businesses. And what do you use in any of those businesses that are like construction related, right? Trucks, pickup trucks. And Ford, the F-Series is like the biggest in that space. But if we're talking about a weakening economic environment, if we're talking about there's going to be far less homes built next year, in 2023 than there was this year, if you're talking about way less pools being built, right? Way less landscaping being done and all those sorts of things, guess what? That's going to hurt Ford's truck sales. And if that hurts Ford's truck sales, it's going to hurt their numbers, their revenue, their net income, their profitability, and obviously their stock price. And so that's why even a stock like Ford that has been putting up good numbers just is not performing. And the same could be said for the housing stocks, right? The housing stocks are, if I pull up my trading view here, right? Let's go ahead and look at housing stocks. Housing stocks, we know these companies have been making money hand over fist when it comes to home builders, right? But where's housing stocks? There we are. Look where these stocks are all trading at. Look at a Toll Brothers. They're making money hand over fist over the past year. The stock's, $45 here a day. And, would I be surprised at all if Toll goes to under $40? I would not. Not at all. Because here's the thing, they got earnings coming up here. I think they're going to have to start lowering everybody's expectations around 2023, which is not going to be an ideal situation there. I think maybe some folks on Wall Street are still kind of in a pipe dream situation where they think 2023 is going to be great for housing. And I think it's going to be a very, very tough environment in 2023 for housing because, we got high interest rates, we got low confidence, and we got consumers in a tough place. That doesn't bode well for housing, just bottom line there. So that's kind of all going on, okay? Look at even Tesla Tesla is much closer to its 52-week low and 52-week high now at this point in time. And this was even after they announced the big full self-driving, let's just call it a bigger dollar amount that's going to cost. The stock still couldn't go up today. It was down 2.2%. And, this is a stock obviously I personally own, but, it's a tough environment. And there's just not a lot of belief that auto is going to be strong. We'll see. Maybe everybody's wrong on that and autos will be strong. Or maybe autos are just strong for Tesla. We'll see, okay? But that's kind of got to play out. Now, in terms of the market in general, here's the deal. The NASDAQ, it made an epic move, right? Everybody knows we were due for a pull down. No doubt about that, okay? Now, in my personal opinion, there's nothing anybody can derive from this pull down. I don't think bulls can say, we're going right back up. I don't think bears can say, oh, see, you're going back down to new lows. There's nothing that can be derived from this. We know we were due for a pullback, man. This was an epic move. We're talking, this was over a 20 percentage point move there in a pretty darn quick amount of time. You don't go up in straight lines and you don't go down in straight lines in the stock market. That's something we do know, okay? Unless you're in a freak situation where everybody closed down the economy out of nowhere for, the next 3 years or something like that, right? You don't go up or you don't go down a straight line, especially not up, right? It's, you don't take an elevator up, you take a stairs up in the stock market. And that's kind of the way it goes. And right now we've gone down a few stairs, let's just put it that way. But there's nothing you can derive from this situation, in my opinion. The bulls can't feel confident. The bears can't feel confident. What just happened there is what should have happened there. From, about 13.2-ish to about 12.3 where we're at, that should have happened. Like, you're going to have that happen. And in any type of market, the big question now I think everybody's looking at is like, they saw this kind of thing, and they saw this thing, and they're like, are we going to go back down to new lows? That's going to be determined upon CPI numbers. That's going to be determined upon, obviously, earnings, right? Which in terms of big tech's not reporting earnings again until 2 months from now. Now, we do have some more big tech reporting this week, but really, from what I remember, it's just NVIDIA and Snow for this particular week, okay? Now, for me personally, I'm looking to get back out there. I've been cashing up pretty darn heavy over the past 2 months. And just kind of taking this as a moment to catch my breath and get back in a good cash possession. So my plan has been not to start deploying money into the market again until September, essentially. So I still got like a week here, but I don't know. Like if let's say stocks are down big again tomorrow and the Chef's down big again tomorrow and Palantir and some of these other stocks, I think I'm going to have to step in and be a buyer. And if Meta's down big tomorrow and in some of these other stocks that I'm, very interested in, I'm going to have to pull the trigger and I'm going to have to, let's just call it, do some buying out there tomorrow, which is a little ahead of kind of what I had planned to do. But we'll see. We'll see kind of what shakes out. My goal was to, do hardly any buying in July and August. And I've done a pretty good job of that as the market just kind of floated up, and just kind of like got to take a step back, cash up, put myself in a position of power. Now I'm in a position of power again. And, if this market keeps tanking, I'm in a position to obviously deploy some funds out there. And that's kind of what I'm looking to do. It's a big week out there, guys. I don't know if you know, if you didn't get to see this video yet, 44,000 people have gotten to see this so far. I think we need another 44,000 to check out this video. But, basically I cover what exactly is going on this week. So if you haven't got a chance to see that or you forgot some of it, go check that video out. And because the next 48 hours to 72 hours. We got a lot more going on in the stock market this week, guys. I appreciate you joining me as always. Thanks for being here, guys. Much love. Also, if you're looking to basically get access to a couple courses I have for free right now, check out the pinned comment down there. I'm going to have those free for the next couple days here, and then we're likely going to take those offline. So if you're looking to get access to those, I basically had this free for like the last month. Check out pinned comment down there, and we'll get you enrolled in whatever one's the best course for you as far as that goes. Much love as always, and have a great day.